Welcome back. The economy is already struggling due to the pandemic, and now rolling blackouts are affecting many businesses again. Tomorrow, Finance Minister Enoch Godongwana will deliver the medium-term budget statement. To preview that and find out about the rate of recovery, let's speak to Professor Raymond Parsons from the Northwest University Business School. Prof, thanks for your time. We appreciate it. Before we get to the budget speech and what to expect, let's talk about the impact of load shedding on businesses. We've spoken to several businesses across the country, particularly in Johannesburg, who are left without power for hours because, they haven't been restored even after load shedding. What impact does this have on our economy?
Yes, well, good evening to you. And as you rightly said, I can only confirm that what has happened with the load shedding is, of course, bad news for the business community and for the South African economy in general. And it really operates at three levels. Firstly, there are those businesses that are simply disrupted and cannot carry on with their activities unless they've got some kind of backup facility. Then secondly, there's those businesses that simply have to close down, especially small businesses who really don't have the margin of capacity to deal with this kind of setback. And then thirdly, and importantly, with the longer term, there's those businesses that won't expand because of the uncertainty generated by the load shedding. In other words, they won't expand the mines or the factories or the shops or the offices on the grounds that they're not sure whether they will get the power in order to reinforce that particular activity. So I think, by and large, it's accepted. This is bad news. It's come at a bad time, and really South Africa could have done without it, given all the other things we've had to cope with in the last year or so.
We've heard time and time again that Eskom is the biggest risk to our economy and economic growth. You've heard from Andre de Ruyter over the past couple of days about the path they're taking to restore the utility, get it to a better form, to maintain power plants, etc. It's going to take a couple of years, clearly. What does that mean for our economic growth then?
Well, I think it's important that we implement something that will provide sustainable solutions in the longer term. And clearly, both Eskom and the government have been applying their minds to the longer restructuring of Eskom and the whole energy market in order to give us the confidence and the sustainability that we need in our energy supplies in the years ahead. But I think more importantly, what we need to do now in the short term is to say, are there other short-term steps that we can take to lessen the abrupt and the unpredictability of the load shedding? I think we accept there's going to be load shedding for the next couple of years, but can it be less abrupt, less unpredictable? And I think one of the areas which we need to look at, given our experience of the past week or so, is are there some other short-term ideas that we can implement in order to ease the load shedding and make it more predictable than it has been in the past? I think it's the shock and the unpredictability that's cut the deepest in the business community and in the economy.
Yeah. All right, let's talk about the midterm budget speech tomorrow. Of course, it's a newly appointed finance minister who's going to make his first budget speech, midterm that is, this time around. What's the right notes that he needs to hit in order for us to see some sort of change and improvement?
Well, I think the first point one needs to make is that with the new appointment of the finance minister, we can honestly say that our national treasury is once again, as it was with his predecessor, in good hands. So the question is, what will those hands do? Now, I think the point one needs to make is that, in fact, one could describe what he will do tomorrow as a windfall budget, or at least mini budget, that he will present tomorrow, because on the back of the 5% growth rate that we're expecting for this year, not next year, but this year, of course, he will be looking at increased tax revenues of, it's been estimated, 150 billion rand, that his debt ratios will look a little better because we've moved to a level 1 lockdown, we've opened up the economy, but subject, of course, to what we've just discussed about the economic impact of the load shedding, the fact is that he now has to decide what fine line does he have to walk? Because we're not yet out of the woods with our debt problems and our debt ratios. So the question is, what do you do with this windfall? And there'll be various claims on it. It'll be, well, should you pay down some debt? There are social spending requirements, which are absolutely imperative. There are social grants that have to be financed. And there are state-owned enterprises that are also clamoring at the door. So I think the bottom line is that you need to walk a fine line here. It's a narrow fiscal corridor that he will have to walk tomorrow, and we'll have to see what doors are at the end of that corridor for South Africa to open up, so that in the next year or so, we get job-rich and sustainable growth over and above the 5% we've done this year. We're not going to repeat it in the next couple of years. The forecasts are down to 1.5% and 2%. So what in its way can the mini budget do to improve those forecasts? Because what we have discovered in the last year or so, and will discover in the next few years, is that ultimately all the good things for our economy have to run through a higher sustained growth rate. And as long as we dedicate ourselves to doing the right things, whether on the fiscal front or on other structural reforms, we will then be able to improve our growth outlook. And what the basic message will be tomorrow are our public finances in a sustainable form in order to underpin that sustainable growth that we need and the job creation that we need over the next few years.
All right, thank you so much for your insight. Appreciate it, Professor Raymond Parsons.